Hey team, a very good morning and welcome back to another daily market outlook. My name is Fabio. EURUSD is consolidating ahead of the Federal Reserve FOMC press conference and also the interest rate decision. So we can't expect that much from EURUSD at the moment, but what I do know is that it's very likely that there is going to be a big move incoming for these major dollar pairs. Now, looking at EURUSD in itself, the 4-hour time frame still remains in an overall bearish immediate order flow. As you can see, we have an overall supply chain, which maybe is a little bit more clear even on the 1-hour time frame, where every single time we have a buy up, strong sell down, supply zone in control. Then once again, we have a strong buy up, sell down, bump in the road gets taken out, another sell in towards the downside. Then again, buy up, strong sell down, that broke market structure. And then again, that acts as an area of supply where we are currently inside of. So what we're waiting for here on EURUSD is for pretty much the supply zone to get broken. We're waiting for an overall breakout and then we can trade the overall continuation up higher, or we're going to be waiting for the overall 4-hour order flow shift, which is the overall larger internal market structure that will then shift. And what I mean with that larger internal market structure is the overall pullback demand zones, which were created in the overall leg up, which led price to take out this overall area / point of liquidity. Now, the 4-hour time frame still remains bearish, with this here being our bearish impulse in towards the downside. Step 2 for myself was then drawing in my Fibonacci retracement. I can then clearly see, okay, we retraced into premium pricing. We took out liquidity by taking out the overall third trendline touch. 1, 2, third trendline touch. Sellers get into the market, stops are placed above the highs, but as you can see, that overall, let's say, third trendline touch just pushed the market back down in towards its area of demand. From there, over order flow continue to hold, push the price back up in towards that final liquidity point. And then from that final liquidity point, we can obviously expect the market to start selling off. However, because the daily time frame still remains bullish, so we had a breaker structure up here, swing low, swing high, final internal liquidity low here got taken out. Therefore, we can expect, based on the daily time frame and what we've been seeing in this year, is that the next impulsive phase is most likely ready to start if the overall daily trend was to continue. Because when do we expect the overall daily trend here to continue pushing in towards the upside? Once final liquidity gets taken out and once we see what price retrace into discount pricing. So overall, based on the daily, it makes sense to look for those longs. However, on the 4-hour time frame, what do we see? We see that we've developed some larger structure where currently the overall 4-hour market structure is still bearish, right? Overall strong impulse down, bump in the road gets taken out, and we start seeing some downside movement. Now, for this 4-hour piece of price action to kind of like, let's say, continue with what it was doing, meaning continuing pushing in towards the downside, we would need to see an order flow shift, which is a break of this low over here. This can, for example, be compared to a previous price action here where this was the swing high, this was the swing low, this here was an internal liquidity high or bump in the road. Bump in the road got taken out. What I then waited for was this demand zone to fill. Demand zone fills. Then what do we have? We have an area of supply created. What then happens? Retest of that supply zone, and then you have the shorts in your hands. So it's very similar to what we're now waiting for here, where, okay, liquidity got taken, 4-hour swing structure is bearish, and now what I'm waiting for, again, is just for the order flow to shift in towards the downside. We see the retracement, and then we can look for another short in towards the lows. Okay, so that's currently the highest probability play. Yes, you can take longs in line with the overall daily swing structure, but keep in mind that is lower probability because the main time frame that you're taking these trades on is going to be the 4-hour time frame, in my opinion. That is my main time frame for myself. However, this is perfectly fine in the sense that, yes, it makes sense to see this continuing pushing in towards the upside, but preferably I'm waiting for more confirmation, and that more confirmation for me would be a break of the 4-hour market structure, push up. This is a future then bump in the road. Let's say today we see with FOMC that EURUSD pushes massively in towards the upside, then that would be a future bump in the road, which we can then take out and then look for longs from once again. So that is EURUSD for you. Waiting for pretty much these two scenarios, yeah, let's see if we get them today. Dollar index in itself is obviously trending internally in towards the upside again. For myself, dollar index, not a lot to say here. What I can do, I haven't done this in a long time, is just clean up the chart real quick. And what I want to show you is that based on the daily time frame here, it still makes sense for the dollar index to continue pushing up higher, though there is still room for some more manipulation. Now, what I mean by that is that the dollar index in itself had a beautiful descending correction in towards the downside here. We had a one low, a second low, and then we had a fake out on the second low, which is a clear sign of a reversal pattern, and now pushing the market up higher. So what you would now be looking for is for the market to ultimately push up in towards the very first high of the overall descending structure. Now, the only thing that I don't like here is that we've done what? Slowed down. We've taken liquidity above this high and then straight away retrace back in towards the downside, breaking market structure here again. Now, if you look at this, you could also say, hey, Fab, here I also have, once again, ascending market structure with a one high, a second high, and then a fake out on that second high, break in towards the downside. Who knows, maybe a little bit more of a push up, and then a much stronger push in towards the downside after taking out this liquidity point here as well. So this liquidity high might be enough to feel now the dollar index slightly lower. Now, this analysis does have somewhat of legitimacy. However, what I would be waiting for myself is for the overall market structure to shift / order flow to shift. So that means that this demand zone would need to fill. For me, there's still some liquidity resting underneath here, so this is still a possibility. Market structure is always king, by the way, so that's why I'm focusing on that together with the order flow. And you can see that the order flow is still holding, right? Previously, we had this area of demand over here. So yes, those shorts could start playing out, but I would only start looking at shorts once the low of order flow breaks. So push down, pull back up, and then another push down, and then this here would be internal liquidity to fuel that next leg down. Other than that, this black dotted line here could still fuel the next leg in towards the highs, as we are still bullish here internally on the dollar index. This was just a swipe of liquidity. Doesn't mean that we're going to see a full-blown reversal, but if we, for example, see a swipe of this low here, and then we see another break up again, once we break that high, yeah, 100%, we're going to take out this high again. So dollar index is kind of stalling here, giving us a little bit of uncertainty, manipulating the highs, manipulating this internal low here, could manipulate a little bit more. So stay a little bit safe on the dollar index, yeah, let's see what happens. If we can break maybe this internal order flow again, then it's likely that we're going to start pushing up higher once again. Going into GPUSD, the overall analysis there stands still as well, that I'm looking for a short position. This overall kind of like trade setup here is still perfectly valid to take. Overall, we can still expect the GU to head down lower. We are looking for the next leg in towards the downside. Now, we've had a push down, a pullback up, taking out all of the internal liquidity, push down, pull back up, taking the first points of liquidity. So yes, we can expect another drive in towards the downside, especially also after retracing in towards the 0.5 fib, which is the red line here. Though, yeah, I mean, you guys can kind of guess it as well. The highest probability play will come after breaking this low here, because then the overall order flow shifts, because this was a demand zone here. Now this here is an untouched demand zone here. So if we break that black line's low, retest, boom, then I'll get into this short here. Other than that, the only sell limit that I'm setting is on this black dotted line here, stop loss here above the highs, targeting the lows once again. So that is a short I'm taking, or I'm going to take this short here, where we then break market structure, retest, boom, get that overall short position. So that's GU. Going into AU, we can see that AU continues to push up higher, perfectly fine. I'm still looking for the long positions on this, though I wouldn't be surprised for somewhat of reaccumulation or liquidation. The overall analysis on AU still remains very, very simple, where we've had the overall swing low, the overall swing high, and we've had the final liquidity get taken out. So these are the kind of setups that you kind of dream of in a way, where you just set a limit on the lowest liquidity point, just target in your higher high again. So yeah, ultimately we're expecting AUD/USD to continue pushing up higher again. Where is it going to happen from? It could just trickle up higher and higher, though any phase of reaccumulation in towards the downside, any liquidation, and then market structure shift up higher again, that is just going to provide us with another long opportunity. So I'm only focused on longs on AUD/USD, and any retracement, let's say we do get a retracement today, then next week I'll be looking for some new long positions. Same goes for NZD USD. NZD USD is currently consolidating though. Keep that in mind. We can see currently that we're stuck. It's out of this box, so don't force any new positions. I would say wait to see what happens today, and then based on the new price action that we are then provided, we can look for some new positions next week. We still have some equal lows here open. So just wait for price to redevelop and give us some new long opportunities. Going into USD CAD, USD Swiss, USD Yen and Gold. USD CAD in itself, very slow as well. Obviously waiting for FOMC. This is slightly more complicated. It has broken obviously in towards the downside once again. So it makes sense to head down lower towards these equal lows now. Though we need some internal liquidity, which is either this high or this high. So just waiting for shorts from those highs ultimately before getting involved. Then we have USD JPY. So as you know, USD JPY longs played out extremely successfully this week so far. Looking here at the 4-hour time frame, you can again see that we took out the lowest low, and these are again picture perfect setups. Don't really need to explain them too much, I guess, but you can see impulsive phase up. Where's the internal liquidity? Here and here and here. Where did we get the valid reaction? On the lowest low, because that's where we got the change of character up. Even with the double change of character, price from there has now continued to push up higher, and yeah, should likely continue to push up higher. That's just all that makes sense. Any potential retracement, for example, towards this bearish candle here, that would just be another opportunity to look for some new long positions. Then we have, of course, USD CHF. USD CHF in itself is very, very slow. Not a pair that I'm a massive fan of trading at the moment. Again, guys, looking here at the daily, direction for me is unclear. I would much rather trade USD JPY, where the direction is clear here on the daily, and where it is clear here on the 4-hour time frame, than USD CHF, where the first of all daily direction is unclear, but then also if you look at the 4-hour time frame, and what you're going to be able to see here is that, okay, we've left behind equal lows here. Yes, we have potentially seen, for example, here break structure down, then let's say the break of structure in towards the upside, break of structure in towards the upside. So it's more bullish than bearish overall. So yeah, I mean, ultimately, you could look for some new long opportunities. Maybe this is the internal low. This was a pullback phase where I was looking for more downside based on the daily range, because the daily time frame has been ranging. But again, you're kind of creating liquidity here with the third trend line touch, right? So looking at the 4-hour time frame, I would prefer longs over shorts. Looking at this at the moment, you could say this is the overall internal structure. Let's have a look at the 1-hour time frame as well. Based on the 1-hour time frame, you could say the same, where you've had, let's say, push up, push down, push up. Then you've had the overall pushes down, break, and then here break of structure up again. So this is indeed swing low, swing high, and then internal liquidity is, for example, here or here. So maybe look for longs from a little bit lower lows before getting involved. And then, of course, gold. Gold today will be moving massively after FOMC. I'm still looking for longs on this. I would prefer a nice aggressive sell-off to then look for some new longs, though there's no guarantee of that happening, of course. Could also be as shallow as these lows being taken, or we're going to see a bigger dump if any crazy expectations are shifting within the markets. So ultimately, for gold to pump up higher, we need lower interest rates. So let's see what is said, and that is going to help me take some new positions on gold. But overall, my bias still stands that I'm looking for upside. We liquidated the overall low here. Then after that low got liquidated, market structure shift up, internal low got liquidated, push up again. And now where do we have internal liquidity? We have liquidity, for example, here. So that's why I'm looking for longs from that low, for example, or on the low of the range, also perfectly fine. But that will be based on what is, or what happens and what price action we get today during that FOMC. So that's it for today, guys. Thanks so much for tuning in. Wish you a fantastic trading day and speak soon.